Welcome back, folks. I am Jon Najarian, and this is 3 at 3. As you know, 3 at 3 is when we bring you unusual option activity, or UOA. Why do we do that? I don't know, because it works. As you're about to see, when somebody big comes in and buys a lot of upside calls, we're probably going in that direction. If they come in big and buy downside puts, we're probably going in that direction. I'll give you some of those insights in just a moment, and I'll also emphasize that they are not always right. In some cases, people think that this is so prescient that perhaps these are insiders, and in some cases, perhaps they are. We are simply following that unusual activity. We are not privy to inside information. We are looking at the actual data that comes streaming at us to the tune of about 7 million quotes a second. So luckily, we have algorithms, our heat seeker algorithm among them, that will actually ferret out those big trades from the garbage nothing trades to tell us what's really going on in the market at that given time. And then we generally jump on board. And so what I'm about to show you is exactly that. My buddy Scott Wapner couldn't even stand to look at it. He couldn't stand to look at it Friday, and boy, he's not going to like the looks of it today either. We, of course, were down hard in pre-market. We were down last night. We were down harder this morning, and we accelerated into that noon hour when Scott hosts his show, The Halftime Report. My brother Pete was on there today. I'll have some trades from him in just a moment. But folks, it is hard to look at. I agree. And tough thing is that, this is something that the president really wanted to do. He really wanted to get us off of fossil fuel. If you're somebody who supports that, then I guess you don't mind the $6 plus price for gasoline or natural gas going towards $10 and some of these others. But I am a guy who trades, who is looking for how do I connect these dots, and why am I seeing such big buying in these energy stocks or in the S&P 500 puts? So we're going to show you a little bit of that right now to give you an idea of how this works. You might recall that last week on Wednesday, I guess it would be, we talked about the huge buying by 50 Cent. 50 Cent, not the rapper. It's a man or woman, again, I don't know who it is, that was nicknamed 50 Cent. Why? Because the person, whoever it is, generally buys about a 50 cent option. So as you see on the screen here, they bought 95,000 July 50 calls for 42 to 54 cents. Call it 50 cent. And when they do that, we don't know if it's a protective position against a very large multi-billion dollar portfolio. But we do know that even if it's just protective, it's somebody who wanted them fast. They wanted that activity now. They needed it now. They didn't want to buy it over time and perhaps try to eke out a couple pennies better price. They wanted it in a hurry. So that's why we joined. Now, it could also be that 50 is buying those because they believe that the market's about to have a severe downturn, which, of course, it did Friday and it did again today. So they were buying with that July future trading at 23.93, traded through 34 today, folks. So as you might imagine, those puts and any kind of spreads you put on, which we did and we spoke of already last week, made you some good money. Either protected some of your portfolio against this horrific downturn or gave you a straight out winner if you were already into cash and just decided, you know what, 50's buying a lot of these puts, I'm going to buy them too. In this case, instead of puts, they're buying calls because the VIX goes up when the market goes down. You guys know how it works. Also, last week, we talked about the bearish put buying in American Airlines. I think this one also might have been Wednesday, the 8th of June. They were buying puts with the particular American Airlines trading at 1570 plus. As you see here, falling at $2 full and about 30 cents from that level. And the puts that we own, making some pretty good money on those puts, folks. Bang. So just pointing that out as well. Here's my brother Pete talking about some big spider buys from Friday. I believe he was on the show on Friday, and the spider was down 11 to 390. It's nowhere near 390 today, folks. In fact, Pete was talking about some big put buys like these. SPY. Look at those. I mean, on Friday the 10th, they bought 30,000 of the July 377 puts. They bought 100,000 of the June 345 puts. Both of these making people a lot of money today, as instead of being at 391 or 393, it falls all the way down into the 380s. And I don't even want to guess how much lower it goes here, folks. But that 100,000 option purchase of those June 345 puts, that is 10 million share equivalent. 10 million times 30 cents. That's a big trade, folks, because, of course, every option's for 100 shares of stock. So when you're buying 100,000 of those, it's 100,000 times 30 bucks. That's a big trade, and that's why we follow them. Also want to talk about RebelCon because, as I have predicted, we are going to sell out pretty quick. If you would like to join us September 21st through 24th, sign up now. There's time, and then there's time that's already run out. The clock runs out. You have to do it while you can. We still have packages as well as just straight out tickets. It's at the Four Seasons. We have a special rate there. You're going to run out of that, and then you're going to run out of time and not going to be able to be there, and you're going to have to go instead to a virtual. If you'd like to be there in person, September 21st through 24th, in the middle of the country, right down there in Dallas, Texas at the Four Seasons, by all means, marketrebellion.com/Dallas. That's marketrebellion.com/Dallas. There are those put buys again. There is also on Thursday last week a big IWM purchase, massive IWM purchase, 35,000 of the small cap puts. My gosh, folks. I mean, again, none of us, at least I'm not rooting for the market to fall apart. I do like making money to the downside, but man, it's so painful on the rest of my portfolio, I must say, just like you. I don't like it. I like that I've got a nice hedge here, but I don't like seeing Apple and Microsoft and my big stocks get cracked. But trades like SPY protect that. Trades like the QQQ protect that. If you've got small cap exposure, the IWM protects that. All right, today, again, with the SPY at 381, 10 full points lower than where it was last Friday when Pete cited those 100,000 puts. They jump in and buy 28,000 of the July 372 puts. Those are July, so that's a little over a month into the future at the 372 strike, approximately $10 lower than where it is. And look, they're paying $10 for that, folks. So if you're paying $10 for something, again, $10 because every option's for 100 shares of stock, that's $1,000. Because again, $10, multiply it times 100 shares, that's $1,000 times 28,000. That's a $28 million trade. You need to be aware that somebody's putting on some serious coin to protect their portfolio or a straight out bet to the downside. So we jumped in and rolled down. Bang. Wow. If you'd like to learn more about what we do, how we do it, go to marketrebellion.com/get started. Maybe you're somebody who wants to learn how to protect your portfolio. Do it now. If you're somebody that wants to get in there and buy, do it now. Why? Because you can buy into this market down some 22% from the January 3rd highs, you can get into this market with limited risk by buying an option or an option spread, a call option or a call option spread. But you got to understand them before you trade them, folks. Nobody's going to sit here and tell you you should just buy options. No, you need to understand time decay, which is theta. You need to understand volatility, which is vega. We can make it simple. That's what we do. We help people understand how to trade options. Go to marketrebellion.com/get started for more. All right, here's Pete talking about Deutsche Bank. We all know that the European banks didn't get nearly as repaired as their American banks did. Credit Suisse and Deutsche among them. They've got great derivative traders. I'm not putting their derivative traders down, but I'm saying they've got a ton of exposure without the same balance sheets that the U.S. banks have. They're not the same as JP Morgan. They're not the same as Bank America Merrill. They're not the same as Citigroup. People are buying downside puts in Deutsche. You need to be aware of that. Third and final of today's 3 at 3, Suncor Energy, July 40 calls. Why? Because it's down 3.5 or 4% today, and they're still buying, which took it through 40. Now they're buying upside calls in big numbers in Suncor, symbol SU. So you need to be aware of that. That's another way to play, just like these solar stocks. When you see dips like this, unless you really believe that we're not going to go back towards 120, 125, 130, and so forth, I'm unfortunately in the camp that believes we are going to see that. So because of that, I am looking for upside out of this one, Canadian tar sands and other types of drilling up in Canada, Suncor Energy, symbol SU. Well, if you'd like to learn more about how to trade with momentum, how to jump on that momentum and start paddling and act like a surfer, well, by all means, check out marketrebellion.com, because you can register for a free webinar tomorrow, June 14th. Free webinar, 4 p.m. Eastern Time. People love these. We have thousands of you that join us every time we do one of these. We have somewhat limited space. I think it's limited to 10,000. But if you want to join us, by all means, go to marketrebellion.com, sign up. We will also send you, if you can't make it live, we will send you a recording of everything that was talked about in that webinar so you can watch it at your own pace whenever you like. Thank you for joining me today, folks. I hope you have a great day. I look forward to seeing you soon. I got to jump the jet, head out to New York right now, but I'll see you tomorrow. Bang.